As a day trader, it is absolutely crucial that you understand the candlestick chart, because this is the one tool that you'll be using your entire trading career. And so if you get the foundation wrong, then in future you might struggle. And so in this video, I will show you a very specific way of looking at the candles and reading the candles themselves so that you can be able to predict the market direction with ease. If you are new to the channel, subscribe. Let's jump into the video. Alright, so this is what a candlestick chart looks like. And if you are a complete beginner, this might be overwhelming, because what do you do with this? Now, here's the thing. These candles, they are a representation of price and time. So it's price times time. So if you look at here, we have the 5 minute, 10 minute, 15 minute, 1 minute, daily, 1 year. And what that means is that you are being shown the activity of price in any given time. So in a defined period of time, 5 minutes, 10 minutes, like that. Now, one thing that is common with candles is that they are all alike, and each candle in itself has a personality that you need to understand so that you can start being in flow with the market. Now, there are a couple of concepts that you need to understand, but let's start with the candles themselves. So a candle usually has a structure, and the structure is very important because that is what it gives it its personality. For example, let's use this bearish candle. So red is going down. Now, the difference between a candle going down and a candle going up is in the structure. So every candle has these 4 things. Number 1, we have the open, and then we have the close. So what is the significance of the open and the close? So the open is showing you when the candle started. So if it's a 5 minute candle, then the open will always be the first minute or the first second of the current 5 minute cycle. So whether it's 8 to 8:05, then 8:05 to 8:10, like that. That is the open. Now, the close is when that time was over. So if it opens at 5 minutes, then it's closing at 10 minutes. Now, the open and the close define the direction of the candle itself. So if we open higher and we close lower, it means price went down. For example, in this case. Now, price, when it's moving, it does not usually move in one direction at the same time. Price, and you'll notice here, price is always moving up and down, up and down, up. When price was up here, it was a bullish candle and it created a high. So that is what we call a high. And a high is just the highest point price has reached in your window. So if it's a 5 minute window, in that 5 minute window, the highest and the lowest is the high and the low. So at some point, this was a bullish candle, then it got pushed down and it went up to this area here, which is now the low. So the high and the low is always constant. It's not changing. And then it got pushed back again, and then the close. It's as simple as that. Now, why is this important? This is important because the candle in itself is showing you a lot of information. Now, firstly, the high and the low is the most important thing you need to watch. So the high is that high and the low is that low. Now, why is this important? This is because it is showing you where price was unable to push further. So the high means price went up to a ceiling and then it reached there and there was resistance, tried going up resistance and then it was pushed down. Same thing, when price is going down, it reaches a floor and it tries to go down, but it fails and then it's pushed up. So that shows you clear support and resistance. So we have resistance up here, we have support down here. Now, this is important because the next candle will give you a sign of where the market wants to go. The whole point of this is to be able to read the candles. So, if the next candle starts here and breaks out and closes above, so now we have a close. This is what we call a breakout candle. So price breaks out of support or resistance and then closes outside of that support or resistance. This is telling you that we have strength in the market and there is a very high likelihood that now we will continue going higher in the direction of the breakout. Because remember, we had this ceiling. The moment we break above that ceiling, there is nothing else that is stopping us from continuing to go higher until we reach another ceiling. Alright, so that means that expect the next candle to do what? To continue in that direction. Now, again, if price breaks out like that, then it's telling you that we will continue going in that direction. Now, so far we've had 3 breakout candles. This is very good signal that we are continuing with the trend. However, you will see price print a bearish candle like that. So, say for example, you bought down here and then you are up the 2 candles. So, once you see a red candle, this is what we call a red flag. And a red flag is just a signal that is telling you to, hey, focus your attention here. Because if price breaks below this candle to the downside, then we have strength coming in. So we have reached our resistance and we are being pushed down aggressively. So it's time to exit our position before we get stopped out. It's as simple as that, which brings us to the foundation of this strategy, which is the breakout and the failed breakout. So here's the thing. Price wants to do 2 things. Price wants to either go up or price wants to go down. That is why we only have 2 types of candles, red candles and green candles. So, if you know this, then it's important for you to know the signs that price wants to go higher or wants to continue with the trend if you are going up. And you need to know price wants to go down. So this is the simple thing that we use. So say you have this as your landmark candle and you have the high there and you have the low here. Then here's the thing. If the next candle is a breakout candle, so let's use blue. I like blue because it just looks like profit. Anyway, so we have 2 blue candles like that. This is showing you price wants to go higher and it will go higher. And then you will see, all right, so now the momentum starts going down and then you have your red flag. So these candles themselves will reveal where price wants to go. And then if price continues to break out like that, then what you do is now you are comfortable moving your stops below this low. Because anything below it, price wants to go down. You don't want price to go down on you when you are up. When you are going up, you don't want price to go down. So you need to protect yourself. And the candles themselves will guide you. For example, let's just observe price action here. Let's delete everything and let's start here where we have these moves. So we see we have this one candle. This is our reference candle. Next candle is a breakout. So it breaks out. Next candle is a red flag. So if it's a red flag, we draw a line at the low like that. And if we break below it, we exit. But what happens? Price continues going higher and higher and higher and higher until here. So price prints a red flag and then confirms with a breakout. So at this point, if you bought here, then you are exiting here. And now this is your profit. It's as simple as that. So you know when to get in, you know when to get out. Now, let's see another example here. So price, say for example, you got in after this breakout. Price continues going down, going down, going down, going down, going down. And then we have a red flag or a green flag, whatever you want to call it. Then price goes down, goes down. Then it prints another red flag, which is a green candle. And then we have the confirmation. So if you don't get out here, notice what happens. Price just comes back and stops you out. Let's observe something here again. Say for example, you got in after this breakout. Price goes down 1, 2, 3, prints a red flag. Then goes down 1, 2, 3, 4 before printing another one and then confirms with this breakout. So if you don't exit, you see you get stopped out. So understanding where price wants to go is very important because now you can define your entry points and your exit points, especially when price does not reach your TP. So if you got value from today's video, subscribe and I will see you in the next video. Peace out.